Hey everyone, and welcome to the Ag Finance Briefing End of Week Edition. I'm Madison Durkin with Ag Lending Group, your ag real estate lending experts. It's Thursday, July 10th, and I want to get you caught up on everything that moved this week before you head into the weekend. There's a lot to cover, so let's get into it. The big picture. It's been an active week in the rate market. The 10-year Treasury is sitting at 4.58%. That's up from 4.38 at the end of last week. And that move matters because it pushes long-term fixed ag real estate rates higher. The Fed fund rate is still at 3.50 to 3.75, prime at 6.75, and no cuts are on the table for the rest of the year. The takeaway this week, rates crept up and commodity markets surged. That combination is actually important for ag borrowers. I'll explain why in a minute. Commodity snapshot. It was a big week for grains coming out of the holiday. Corn at $4.75 per bushel, a strong rally this week on weather concerns. Soybeans, $11.82 per bushel, up 50 cents on China buying Gulf and Pacific Northwest cargoes. Wheat, $6.39 per bushel, surging after the USDA dropped a historic number. Harvested wheat acreage projected at 21.2 million acres. That's the smallest harvest since 1877. Livestock, live cattle cash at $255 per hundredweight, which is exceptional. Feeder cattle at $360 per hundredweight, still near historic highs. Hay, the national index at $174 per ton. Alfalfa around $189. Pull back from June highs as first cut supply hit the market. Here's my take. When corn and beans rally like this, crop ground values follow. That wheat acreage number from the USDA is historic. If you've got wheat ground, your collateral position is stronger than it was Monday morning. For cattle operators, $255 cash is exceptional. Strong commodity prices plus strong land values is the best position you can be in when you walk into a lender's office. That's exactly where a lot of you are sitting right now. Ag real estate loan rates. Here's where rates landed this week with the Treasury move. We're looking between 7 to 7.50% right now. The 10-year moved 20 basis points in 1 week. That's not huge, but that's a reminder that waiting has a cost. If you've been thinking about locking a long-term fixed rate on a purchase or refinance, this week is a real-world example of why sooner beats later. Your income picture is strong right now with commodity prices up. Your land value is solid. Lenders want to see both of those things. Use it. FSA benchmark rates. FSA updated their rates on July 1st, and they went up. Now, we don't offer FSA loans directly, but here's the government benchmark for the month. Effective July 1st, 2026. Farm operating, 5.125%, up 5% in June. Farm ownership direct, 6%, up from 5.875%. Down payment program, 2%, up from 1.875%. Emergency loans, 3.750, which is unchanged. My take is even the government raised rates this month. If you've been counting on rates dropping before you make a move, the data is pointing in the other direction. Private ag real estate lenders can move faster and with more flexibility. And right now, speed matters. Land market pulse. Summer auction season is active and buyer demand is holding strong despite elevated rates. Tight inventory continues to support values nationally. Average farmland is around $4,350 per acre, and crop ground is looking even better after this week's grain rally. One regional note worth flagging, screw room cases have been confirmed in South Texas, Crockett, Edwards, and Terrell counties. If you're a cattle operator in that area, stay on top of biosecurity. Disease pressure on herds can affect land productivity assessments when it comes time to refinance or finance. Loan tip of the week. How to use your existing land equity to buy more ground. This is one of the most powerful tools in ag real estate, and most producers aren't using it. Here's the simple version. If you own land that's appreciated, and most of you do, that equity is sitting there doing nothing. You can pull it out through a cash refinance and use it as a down payment on additional acres without selling a single acre you own. Here's an example. You've got 200 acres worth $1 million. You owe $400. That's $600 in equity. A lender might let you borrow against 65 to 70% of that value. which means you can potentially access $250,000 to $300,000 in cash while keeping your land. That cash becomes your down payment on the next property. It's how a lot of successful farm and ranch operations grow, not by saving up for decades, but by leveraging what they already built. If you've got appreciated ground and you're thinking about expanding, that's exactly the conversation we have every day at Ag Lending Group. Give us a call, numbers in the description. What to watch going into next week. 3 things to keep an eye on this weekend and into next week. 1. The USDA report drops tomorrow, Friday. The USDA report drops tomorrow. This is a big one. Monthly supply and demand update for corn, beans, and wheat. After this week's rally, the market's going to react hard to whatever USDA prints. Watch for the Friday afternoon release and what it does to grain prices heading into next week. 2. China's soybean buying pace. They're actively picking up cargoes right now. If that momentum continues into next week, beans can push higher. Great news for soybean ground collateral. 3. Treasury direction. The 10-year climb this week. Watch to see if it holds above 4.55 heading into next week. That will tell us where long-term fixed ag real estate rates are going into July. That's your end of week ag financing briefing for July 10th, 2026. Rates are up, commodities are up, and land values are holding strong. If you've been sitting on appreciated ground or thinking about your next purchase, your timing is actually really good right now. Don't let anxiety talk you out of a strong position. We do ag real estate lending every day. Farm and ranch purchases, refinance, and cash out equity. Give us a call or head to our website to schedule a free consultation. All the information's in the description. I'm Madison Durkin with Ag Lending Group. Have a great weekend, and I'll see you Monday.